Hey guys, welcome to episode 6 of Mortgage Talk TV with your host Dave Orban, NMLS 832451, officially with Mutual of Omaha. So everything is now official. We are 100% Mutual of Omaha Mortgage. So pretty excited. Big company, great name, great company to be backed by. So excited to see where this takes us. Obviously, you can still see construction's going on in my home still. The other half is completed. Still working on this though. Again, had some pipe issues and it's been great. So let's get to the subject at hand. What is your interest rate? All right. So this is probably the most feared question by any loan officer from a customer when the first 10 seconds of talking to someone, what is your interest rate? It's a very hard question to answer. So I want to kind of go into interest rates and how they're determined and what calculates an actual interest rate. Okay. So there's a whole bunch of different things that go into calculating what your interest rate is going to be. Every single customer, you and your neighbor are not going to have the same interest rate. Or you and your cousin who bought 2 months ago are not going to have the same interest rate. So it's not that hard of a question to answer. It's more, we need more information from you as the borrower to give you a correct answer on what your interest rate is going to be, what the interest rate of today is going to be, and what your interest rate when you actually purchase your home is going to be. Okay? So interest rates change every single day. And if you have been paying to the market, today is December 11th, interest rates have been up. Then they went down, level out, and this has all been happening over the last 2 weeks. So for us to get you pre-approved today and say, hey, you're pre-approved at this, you don't choose to do a long-term lock, we're going to float that rate until you actually find your home. That could be a week, 2 weeks, a month, 2 months, 6 months down the road when you're actually ready to put a contract on a home. That interest rate is changing every single day. All right. So right before you make the offer, you're going to call me, your local loan officer, and say, hey, I'm about to pull the trigger on this house. Just want to make sure pre-approval, everything like that. We're going to do a quick check and say, hey, interest rate is the same, or hey, it's changed a little bit. Okay. So things that go into an interest rate, the biggest determining factor, one, your credit score. Okay. If you have an 800 credit score, and your cousin had a 600 credit score or vice versa, those interest rates are going to be very different. Also, what's going to determine the interest rate is how much money you plan on putting down on the property and also what program you go into. Okay, so government loans being FHA and VA are always going to have a stronger interest rate versus a conventional loan with the same amount of money down. All right. So let's just take an FHA and conventional loan together. Let's just say you're putting 5% down on your home and you're determining whether you want to go FHA versus a conventional loan. Your FHA rate 9 times out of 10 is probably going to be better than that conventional rate. But you have the caveat of having mortgage insurance on that FHA loan for the life of the loan versus mortgage insurance until you get to 79.9% loan to value on that conventional loan. So depending on how long you plan on being in that home and depending on what the mortgage insurance comes out to be on that conventional loan, because it varies with your credit score, it could be cheaper to take the conventional loan with mortgage insurance on this 5% down option. That is probably very confusing, and I don't know a better way to explain that other than when we talk and you're ready to look at homes, to break it down on a spreadsheet to show you. This is your life of the loan cost with your FHA. Even though the interest rate seems to be better, that mortgage insurance is 0.85% of the loan amount monthly. Okay, so the easiest way to look at this, and this is just a broad example, this is not interest rates on the day, but let's say your FHA mortgage interest rate was 4%. Okay, That base rate is 4%, but that monthly mortgage insurance is 0.85%. So your true interest rate on that example is 4.875. All right, where your conventional rate may be 4.5, but maybe the mortgage insurance is only 0.35, depending on your credit. Again, this is a very broad example and it depends on the loan amount, everything like that. But on a spreadsheet, numbers don't lie. You would be able to see both options, and whenever you go to look at a home, your loan officer should be able to provide you a spreadsheet of multiple options with everything broken down. So you see what is your true interest rate, what is your monthly mortgage insurance if you're not putting 20% down, or you have to go FHA for some reason, you're gonna have mortgage insurance regardless. Now, for a VA or for a veteran borrower, it's a little bit different because there is no monthly mortgage insurance. There is a funding fee if you do not collect disability from the VA, but that will be discussed in a later episode. So again, what is your true interest rate? It's very, very hard to tell you without pulling a full pre-approval. And we talked about the pre-approval in the first episode. We're gonna get all your documentation. We're gonna know how much money you wanna put down, how much money you actually have to spend, and then be able to give you, hey, this is your interest rate based off today. You have the ability to do a long-term lock while you look for a home. Now that may cost you some money, but in the meantime, if rates go up while you're looking for that house, maybe you spent, $500, $1,000, whatever it comes out to be to lock that rate in. It could be a huge savings in the long run. Or you say, okay, I know I'm gonna be offering in the next week or so. Let's hope rates don't move that much. I'm good with it. Let's go find a house. And we'll be able to tell you your rate then. And again, if you come back and say, hey, I want to put more money down, or I don't want to put that much money down, that could determine what the rate's going to be and what your overall cost per month is going to be. So when you call your local loan officer or call me, first thing you shouldn't ask is, what's the rate? Find out what is the rate for my scenario, because that's what it really comes down to. No rate's the same. Again, you and your neighbor are not going to have the same financial situation, same credit score, same money down, everything like that, even if you're buying, two similar homes. We're going to be able to figure that out, ask the questions that we need to ask to give you your true interest rate. I hope this helps, guys. Again, I'm going to keep pumping these videos out. Please like, share, ask questions. Let's get involved, and I'll keep coming up with ideas to send these out. So again, if you want to know your true interest rate, give us a call. We'll walk through all the steps and we'll get you what that interest rate is going to be based on your information. All right. Thank you, guys. Bye.